Partnerships are meant to be mutually beneficial. And within the financial advisory world, a financial advisor's partnership and relationship with the custodian is one of the most important relationships and partnerships that we have. My name is Matt Reiner, and today I want to talk with you about how the financial advisor and custodial relationship and partnership is going to change over time. Over the past years and decades, financial advisors have been pressing their custodians to lower costs imposed on both them and their clients. And this includes trading fees on mutual funds, trading costs on equities and ETFs. It also includes costs on internal ETFs that they may be running, so the management expenses. And rightfully so, we've gotten trading costs down to zero because technology has enhanced the ability for that, but also it's been a pressing from us as an industry. But ultimately, for-profit partners need to find a way to fill that revenue void. And yes, custodians are still making a good amount of money, but we've taken a revenue stream out of their arsenal, and they're eventually going to have to find a way to fill that void. And sometimes this can lead to misalignment with their partners. They may impose that financial advisors hold certain mutual funds or money market funds, or have a certain amount of assets at the custodian in order to be able to get services and offerings for them. And maybe not having assets there is maybe not in the best interest of us and our clients. But they need to fill that void. And so there's going to be a rubber meets the road situation and scenario where advisors are going to have to give in a little bit to ensure that the partner continues to make decisions that are in line with what's best for ultimately our clients. And how I see this happening in the future is that custodians are going to start charging a custodial fee, because ultimately custodians are turning more into a technology and a custodial consulting type of firm. And so they're going to start charging custodial fees for those services. As they innovate and develop more services and technologies, they're going to start charging a flat fee for that. And this is going to help to fill the void of the revenue streams that have been lost. And in my opinion, this isn't a bad thing, because ultimately, in order to have a aligned partnership that is still focused on the end client, that's what it always should be focused on, then there has to be a balance and both have to be doing well. And in order for that to be happening, if advisors have to start paying some sort of custodial fee, and that money can be invested into innovation and R&D, because these larger custodians can innovate and develop and invest in resources more than an individual RIA or financial advisor can, then that's okay. And if it means that there's more alignment in the partnership that's all focused on delivering better and more cost-conscious value to our end client, then it's okay. And so that's how I think that the advisor-client and custodial relationship is going to ultimately evolve. Because we've been driving and asking for so much, eventually they're going to ask for a little from us. So be prepared for this change and be ready for this change and be okay with this change, because it means that there's better alignment with our partners, as opposed to one side pushing for something and the other side not getting everything that they want. We want alignment because we have to remember it's always for the best interest of our end client. If you haven't already done so, subscribe to this channel now to continue to get alerts on all the new content that we're putting out. And if you want more written and podcast and video content, head on over to mattreiner.com. That's MATTREINER.com.